Beginners Club, welcome to the market update. Today's April 3rd, 2020, Friday, late evening. You guys are probably going to get this later tonight, so you might be listening to it either late Friday night or Saturday afternoon or morning time. But thanks for tuning in. And today what we're going to do is we're going to look at kind of a short-term thing of short-term price action that we've seen last couple weeks. We'll talk about that, and we're going to continue to, I'm going to update you guys on this chart. You guys remember I shared this a couple weeks ago. This is from 1962, so we're going to look at the updated version. We're going to look at what it looks like today. So we'll talk about that, and we'll kind of illustrate, reiterate what we've been talking about pretty much throughout this chaos we've been facing in the last several weeks here. So let's start with the daily chart of S&P first. What we're looking at here is obviously these pockets are gaps, right? We got these big down gaps here, as you can see. We got another gap that was open just this week. This week, I think that was what, April 1st, which was Wednesday. So we saw that gap down here. But for the first time since this big gap down, or this plunge since the mid-February, this is the first time we're seeing this up gap still holding up, meaning we're still open, it's still been sustained. It has not yet closed, and that's a pretty decent sized gap, right? You can see that was, that's where it closed. That was about 5% gap, and end the day with a 9%. So that was just a 1 day 9% move there. It's a big move. We're kind of basically staying above that level as of last 3 days. As you can see, we're kind of seeing a short-term support in that vicinity. You can see that bulls been kind of defending in that level, and obviously again that was a level we saw a big gap up and huge accumulation had occurred back in March 24th here. So this gap, as of today, we really cannot categorize it yet. I mean, if we do see this market continue to march higher, then at that point, we can categorize this gap as a breakaway gap, but we don't know that yet. For us to categorize and label this gap as a breakaway gap, we will need to see another continuation gap. We don't have that yet. We don't have the continuation gap, so that's a big size gap, still open. That's a good sign. The longer that opens, the longer it sustains, it will be better for the buyers. So let's talk about this gap right here. So we saw that gap down on Wednesday, right? And we're hanging around here. At this point, I'm not sure how this is going to play out. In average, looking at things short term, it will just pretty much be 50-50 guess. Are we going to continue higher? I don't know. Are we going to come back and retest this low or the gap area at least? I'm not sure at this point. Well, what I'm seeing though right now, there's a few scenarios I can kind of see. For the bulls to really want to jumpstart, right? And this is a big if, so we are still dealing with very, very fearful market, right? We are still dealing with very, very fearful market. We're still dealing with a downtrend, right? So if the market kind of fizzles around in this vicinity here at 252, right, on Spider, because we've been hanging around in there for 3 days here. If we hang around here at 250, then if we gap it up early next week or something like that, and if we do, I'll tweet things out. You can always follow me on Twitter at 2KKim. And if we do see a gap above 260, they'll make this into a island bottom, because you see there's a gap here, there's a gap. If we were to gap up, and if we do see a thrust to the upside, okay, and that would close this gap right here. So there's a couple things it's gonna establish, and I'm giving you a potential scenario for bulls. I'll give you a scenario for bears also, but I'm giving you a potential scenario for bulls. So then if we see a gap up above this level, right, then then at that point, we can categorize this gap right here as a breakaway reversal gap. After a steep decline, a big breakaway reversal gap is very, very crucial. Many times when you see a breakaway reversal gap, if we can label that as a breakaway gap, and I explained it to you guys that we cannot as of today, because this could still come down and fill it. So we don't know that yet, but if we can able to, the day we label this gap as a breakaway gap, that will be the day that you can see, we can say with the high degree of probability, does not mean you know what I'm saying, we can't, does not mean it's 100% guarantee it's going to go all time high, but we'll have a very, very high probability at that point the market potentially at bottom, and we may see some kind of a reversal there. Market could potentially march higher, cultivating higher lows and higher highs at that point. Because for us to label this gap as a breakaway gap, we must see a next gap, a continuation gap. And that's what I'm talking about. As of today, this gap, we don't know what it's going to be. Because this week, next coming week, this thing could still come down and then fill it. Then it just really was nothing. It was just another pop within a bearish trend before getting back up, get back down, and retesting that, right? And I'm going to go back to a potential scenario for that also. But for now, for bears, but bulls, for the really, really jumpstart thing, if we can see a gap up above this gap. And I only talk about this because I see that we're hanging around 3 days here. If we would have seen some kind of flush today, I will probably, not going to mention too much. I might even say that, hey, if we find a support here, we continue higher, potentially. But for the fact that we're just been hanging around, and I think a lot of people also look at this as a bear flag, potentially could be a bear flag for another low. And again, that's not how I trade. You guys know that I'm a long-term investor and position trader, and that's not how I do things. So I would, either way, that doesn't really matter to me, right? I'm trying to figure out is really looking at things more long-term. I'm trying to figure out is, trying to help those investors. Are we going to see a further decline, right? Are we going to see a further correction? Are we going to see a 50, 60, 70%, recession bear market, or have we bottomed? I think this is $1 million question. I think this is what everybody's looking at, right? Because a whole lot of things make sense. If we bottomed here, what an opportunity, right? If this is the bottom, if we're bottoming in this vicinity, this is a great, great opportunity. But the problem is nobody knows for sure. So that's what I'm trying to figure out here. But this will be the key. This gap area is going to be the key going into next week, right? So you can have to see the gap above this gap, or some kind of, maybe we could do something like go fill this gap, pull back or something like that, and then see another gap up. We could see something like that. But what I'm trying to say is we need to see another up gap, because then hold that, not fill that gap, but hold that. Then we can able to categorize this gap as a breakaway gap. And if we can see this thing gapping above it, then we can look at that as a continuation island reversal gap. And we go up, fill that gap, right? Fill this, there's a down gap there. Fill that gap, then we have established a breakaway gap and continuation gap, and then at least we can see that that's a breakaway gap. And a lot of times when the gap gets filled, potentially we're going to come back and at least challenge this gap again, and we want to see how it behaves at the time. So that's a potential bullish case scenario. Bearish case scenario going into next week will be then, well, if this becomes a bear flag, maybe this thing does not gap up, but it just goes up and fill the gap. Again, a lot of times when the gap gets filled, it's going to act as resistance. That's why for the bulls, it will be if you really want to see this thing going back up here and retest the 275, we want to see this thing gapping above it, jumping over this fence instead of going up and filling it, and then you have to deal with the resistance. You may pull back again. Things can get a little bit hectic, right? So for the bears, potentially a bear flag, maybe go up and fill this gap and then come back down, and we're gonna maybe retest this gap. At this point, Bulls want to protect this gap. Bulls want to make sure this gap stays open. It's not going to be the end of the world for the bulls if this thing comes down. Fill the gap, entirety of it, or even half of it, because the gap is such a big gap, it's going to provide pretty solid support. Come down. If bears manage to bring it down and fill this gap at 223-ish, probably going to be act as very, very strong support. And at the time, a lot of people are looking into potentially this becoming like, double bottom W-shaped reversal pattern. So, but I think if you ask me what I think is going to happen, I think, there's a good chance that this gap might hold, because I feel like this gap is a pretty, sizable gap. And then we saw the 3-day follow through afterwards, right? This is a reason why we're not seeing a just complete, complete flush afterwards. You think after this kind of you see a complete flush. That's why we're hanging around. That's why there's still some buyers left, because it was such a fast, after this gap, such a fast follow through. We have not seen something. We've never seen a big follow through before after this plunge occurred in March. This was the first time we actually saw any kind, because every gap up, right? Every gap up was filled right away, or we saw some bloodbath next day. This is the first time the bulls were managed to get this trend going, at least for the week. And there's a reason why I put out this Fibonacci, so that I've put a Fibonacci here. We're staying at first level. So I'm really trying to find out how this market is gonna behave, going into next week. So that's gonna be the level. You can see I measure from here to here, and that's looking at things a very, very short term. At least for me, that's very, very short term. And you can see that that's the level right here. And you can notice that how the last level fib goes right at that gap level. So it'll be important, important to see how the market behaves in this vicinity. I'm kind of leaning towards that we're going to find support in this vicinity here and not breach the gap. Maybe feel halfway, potentially feel halfway, and then bouncing back up. Unless we see a island bottom reversal, we gaps, and that will be the fast way for the bulls to really, really keep the price inflated, and then potentially getting back up to reclaim 273, which is a gap there. We must feel all the, bulls got a lot of work to do, because there are a lot of gaps that needs to be, and all those gaps are going to provide, it's going to act as resistance. So and there's a 65-minute chart here. There's a little bit of something that I thought was a little bit interesting. We got the equal lows here, but my oscillator is showing higher low right now. Again, this being a 65-minute chart, I'm not sure how much potency we're going to see going into early next week, but let's say we see a move to the upside and a gap up, and that quickly we're going to see this thing getting up here, and then the price go up here and gapping it up, and then we're gonna see that island reversal happening here, and that could potentially, with this bullish divergence in the 65-minute chart, and then gapping up above it, and then potentially making this into an island continuation gap and labeling this gap as a breakaway gap. If we do see something like that, we'll probably come to 275, fill this gap, pull back, higher low, and then continue higher. That was the best case scenario. Again, I would have to look at how the market behaved next week. Again, you can follow me on Twitter at 2KKim, and I'll share charts potentially. If I see something like that, I'll write an article or something like that. But that's how it's looking like right now. Again, I'm not sure at this point, going up, going lower, I don't know. I have to see how it behaves early next week, and we can able to go from there. As I promised, so I want to update you guys on this chart. Again, this is a Dow monthly, looking at 1962 bottom here. You can see that even in this monthly chart, we've hanged around here for several months in this in this environment back in 1962. You can see, oh, where did it go? I just lost my, hold on a second, guys. Let me bring that back up. It just disappeared on me. Where are you? Okay, I found it. It's right here. Okay, here. So you can see that that's 1962. Very similar sentiment. And this is today. I actually just screened this today. Okay, so you can see the similarity here. You can see how here back in 1961, 62, we made higher high.
I couldn't quite hear you. Could you please repeat what
Higher
you said?
high there, and then market plunged 30% some.
I didn't get that. Could you try again?
Okay, I hate that thing. I hate that thing. Okay, so you can see that higher high, and then this thing plunged, and then made a lower low there. So it was pretty much, big trap. I mean, in this occasion, in this environment, in this event, there was pretty much the market trapping on both sides here, trapping the bulls here, trapping the bears here in both directions, because it made higher high, made a lower low. When it makes higher high, a lot of people think that that's a higher high to cultivate a higher low. When it makes a lower low, people think it's going to be a recession. People think it's going to get into a much, much steeper, bear market. So that's why, these things are a lot of times get tricky, but it doesn't happen a lot. And if you see what's going on right now today, we are experiencing something we haven't experienced since back in 1987 to 1929. And I talked about on the last video, I think, that looking at things in context perspective, we're actually dealing with a much, much worse scenario, because we didn't have that excessive move. We didn't see the euphoric move. Like 1987, we talked about how before we saw the 1987 Black Monday 32% correction, there was 120% upside move without 20% correction. Before 1929 Great Depression, there was a 360% upside move for a couple years without 20% correction. Well, the difference with today, it's different because, well, we're dealing with, what we're dealing with is there was 12% correction, in early 2018, right? January. And then there was a 20% correction in December 2018, right? And then there's a 32% correction in March, and the move was only 60%. So we're really getting pounded on, right? Boom, boom, boom. It ain't like 1987, man. 1987 gets you from here to here. That's a 120% move in couple years without 20% correction. This right there, only 60. There were 3 very, very fast, abrupt corrections. 2018, January, 12% came straight down without warning. 2018, December, that 20% correction came straight down without a warning. And then 2020, February and March, 32% correction, the fastest decline ever in history, came down without a warning. So much severe environment compared to 1987. Anyway, so this is what it looked like back in 1962. This is what it looks like 2020 today. You can see that very, very long lower wick there. There was some wick here. But I think what's important is you can see here back in 1962 and 63, we hang around. It really didn't like just V-shaped higher in this scenario. You can see those lower wicks here. You see that? That's in intra-month. This thing did come down and looked like this. See that? It looked like that. But there were some dip buyers that there's some accumulation was, happening in that vicinity, and then finally after basing out, but you can see we never came down, retest the low, and that's kind of what I'm leaning towards to. Just looking at this, I don't believe that we're gonna come all the way down and retest the lows. I think we're gonna hang around here in that vicinity. That's what I'm leaning towards. That's why I said in that chart right here that I don't think we're gonna come all the way down to retest the lows, but I think we're gonna have to hold above in this Fibonacci area and potentially bouncing back up. Looking at this chart here too, I think we're gonna hang around here. Just like similar to, again, obviously it doesn't mean it's, then it doesn't, when I share this Don't be saying shit like, man, like, oh, well, do you really think it's going to happen just like because it happened? Like, no, that's not what I'm saying. What I'm trying to see is we're looking at very, very similar price action. Do you agree with that, right? Very, very similar, right? Even the oscillators are at the level there. And I'm trying to figure out how did the market behave when the market dealt with, or market had to face certain circumstance, right? I'm trying to figure out how the market is going to behave this time around. Doesn't mean it's going to happen exactly the same. We all know that market does not repeat, but it rhymes. I'm sure it's going to do something different. But at least we can go back and check and see potentially how the market could recover. But doesn't that mean it's going to happen exactly the same way? We might even go just V-shape higher. I don't know. We may come down, retest a low. I'm not sure. But at least we can check. We can go back and say, hey, you know what? This is what happened last time. There's a potential. Could have something similar. But probably market is always, insidiously clever, right? It's probably going to do something different. But we'll see. So that's what we're gonna see how the market behave in the next several weeks. But, last time when I showed you this chart, we were just... last time when I showed you this chart, when I was comparing it, I think you guys remember last couple of weeks, there was long lower wick. You guys remember that? When I show you the comparison last time with the 1962, and I mentioned that in that video that I'm looking for long lower wick. You guys remember that? Where I got the long lower wick. I was pleased to see the long lower wick. And now what I want to see is potentially holding. You can see that there were still in intramonth, there were prices hanging around in that vicinity. You can see that right here, hanging around, and that's kind of what I'm looking for here. I see a price in this vicinity potentially hanging around and then potentially getting back up, potentially, right? So definitely a long lower wick here. We're at an extreme over. This is a monthly chart. For this monthly chart to come all the way down, the low of the band, or the bottom of the band, that's pretty oversold, and that's what we saw again back in 1962 there, and it got up to all the way back to near top of its band there. So I think that's it for me, and I'm still looking that into, and I taught you guys, I told you guys last time that we are in more like, Mr. Ken Fisher calls it we're not in a recession, we're in a contraction. I kind of lean towards that as well. We're not in a recession, we're in a contraction, but it feels like we're in a mini recession just because, we're on lockdown, all these business, they can't open, and, all these airline stocks are, they're struggling, the restaurant stocks and their bank stocks. But a lot of times in a secular bull market, we talked to a lot of somebody, you don't want to be part of in this secular bear market, because you invest in it, wait 20 years, you ain't making nothing. But if you knew where you were, even if you were able to go through 1987, if you were to even invest in that vicinity, that's 1,000% on the NASDAQ. That's about 600% on the S&P, right? If you invested here on the S&P 13 years later, that's 600%. If you invest in NASDAQ there, that's 1,500%. But remember, if you invested here and waited 20 years, you're making nothing. You invested here, waited 20 years, you're making nothing. You invested here, waited 20 years, you're making nothing. You invest here, wait 13 years, you're making a lot of money. That's kind of what I mean when I say secular bull market and secular bear market. That's what I told you guys, that we're in a secular bull market. We're not in a secular bear market. You guys understand what I'm saying? We are in a bearish trend. We are in a bearish trend. Looking at things primary to intermediate term, but major primary, we still have to consider. I wonder if I have a chart there. Let me go to so this is a monthly chart of the S&P 500 spider, and I'm not saying that this level is not going to be breached, that I am 100% guarantee that you know, we're gonna hold this level. This is the bottom. That's not what I'm saying. What I'm saying is there's a long lower wick here, and I tweeted this out a couple weeks ago, and you know, some people always like to be so precise with these levels. You always want to look at them as a reference point. Just because it's slightly below it, slightly above it, doesn't mean anything. Just what I'm trying to get at is, looking at things a primary term. Can we categorize this as a higher low? Looking at this in a primary term, right? Because I mean, you can see there were these lower wicks here, right? So you can see that this, we can still categorize. We don't have a lower low yet. For this to cultivate lower low, you'd have to first cultivate lower low. You have to get up, cultivate higher low, and then you would have to do this, right? Then we'll be in a bear market. But for now, as of now, and you could tell me like, yeah, okay, we're gonna break below that level. This is gonna come down. We're gonna start cultivating lower highs and lower lows. That's fine, right? That's the thing. What I'm saying. This is what I'm saying. I'm gonna end the video with this. Is what I'm saying. If you truly believe that we're gonna get into a huge recession, we're gonna come back down to, I don't know, maybe 180 or 120 or even 60 level on Spider. You don't need to convince anybody, man. You don't need to try to argue with anybody. You just put your money based on your conviction, showed it. It's always those people who are, you know, insecure about their views. Always going around trying to pick a fight, trying to tell you you're wrong, I was right, I was wrong, you're wrong. It's just stupid and crazy, right? And all these people, man, behind their computer, behind their phones, acting all hard. It just, if you truly believe that this market is going to tank, then put your money where your conviction lies. If you think this market is going to get up, then you put your money where your conviction lies. That's it. That's it. You don't need to attack anybody. Yes, I do hold bullish thesis of this market. I do believe that we're near bottoming, if not we've already bottomed. Why is that all of a sudden? Because you hold the bearish view and I hold the bullish view in this vicinity, and there's no point of me arguing if you're a day trader, swing trader, because I'm a long-term trader. 248 is a fantastic price for me. If I believe the market's going to go to 400, 500, 600 next several years, 248 is a fantastic price for me, right? But if you're a day trader, please. But if you truly believe that this thing is going to be like next Great Depression and this thing is going to go to 80 and we're going to lose majority of that market value, then all you have to do, you don't need to argue anymore, you don't have to talk to anybody, you go and you short the hell out of it, and I hope that it works out for you. But it's because you're insecure, you see. I'm trying to just completely crush these people out there. Because you're insecure. Because you know that you could be wrong, you know you could lose money. And so when somebody else holds opposite view, you want to attack that person because you think maybe that person could be right. And I'm so insecure. You hurt my feelings. Yeah. You see what I'm saying? You hurt my feelings, Kay. I'm so bearish in the market. I think Great Depression is going to come. And I'm going to short this market. And as I share with you my thought of this market, right? That's my thought. And I'm positioned in this way, and I'm going to continue to be positioned in this way because I believe the market, this is going to be, have you guys ever heard me saying this ever since you've been listening to me, the market update videos and special report videos? I've been doing these videos since 2013, 14. Have you ever heard me saying this? I really believe this is going to be a once in a lifetime opportunity. I really believe that. Once this can get out of this, we may see a huge move like we've seen 1987 to 2000. I actually think it's gonna be bigger than 1987 to 2000 move. I actually think so. And I think what's gonna happen is because we're dealing with such a severe moves, it was just I don't think we've ever seen a decline where it just comes straight down. But we witnessed it 3 times in the last several years. And I called it a gatekeeper. Gatekeeper means market is going to do something very, very severe before it does something unthinkable. Because it's going to make sure least amount of retail traders is going to be part of it. Right? Because think about this. Market has been pounding on us, right? For the last several years, since 2018. 19 was a good year, but 2018 twice, right? And then 2020 right now in March. What do you think most people going to be thinking going forward? What do you think? What do you think? Do you think a lot of people are going to be just full-blown bullish? Even, I looked at here. Let's say market gets up here, somewhere in this vicinity. What do you, and we start to get all-time highs, right? We start to get to all-time. What do you think most people are going to be? Most people are going to be scared because they think, well, man, because think about it. We saw that 20% plunge in late 2018, right? And then we saw that 30% plunge in March of 2020. That memory is going to be fresh. They're not going to want to hold because they're scared. And market could continue higher, and every little pullback, every 3%, every 5%, every 7%, a lot of people will be freaking out. And a lot of people will be tightening up. A lot of people will be like, oh, a couple days later, they're going to close it out. They want to get their gains quickly, right? And so this market has conditioned most traders and investors to be really, really afraid of this market. This is a reason why even back in 1987, man, when this thing thrived from here to here, that I told you from here to here, total gain, what? 1,500% on the NASDAQ, 600% on S&P. There were numerous 20, 30, 15, 20, 30% corrections along the way. Think about how every time there's a correction, how many people are freaking out, right? And I believe that the market, I'm going to end, I keep saying it, I'm going to end the video with this. I believe what's going to happen is if the market continues, and most people always think the same people, think, I said this last week, right? I said this last week. People wanted to wait, right, until the quote-unquote danger subside. So most people didn't get long until up here. What happened then? You're done. But what if people who bought it down here took the risk, bought it down here somewhere? Not bad. Not bad. Even though all your gains are wiped out from 2019, but if you bought it down here, right? Even if you bought it up here maybe, right? From here to here, not bad. It's not as bad. Versus you want to wait until, quote unquote safe, and you start just completely loading up here. That's not great. And so what's going to happen is market has already punished those chasers. And so as the market goes higher and higher, which I believe is going to happen next several years, maybe more, a lot of people will be very, very scared. Very, very scared. And in that fear, market has already just, created so much fear in this market because we've never seen something like this happening. Like market just coming straight down without any kind of warning, right? Market usually likes to take its time, create a topping pattern, maybe hang there a little bit, create a little bit of nervousness. You may have enough people to kind of get out before, but if you can have to see it. But this is first time in the history of stock market where 3 times where market goes up just comes straight down and just plunges, right? And I believe there's a reason for that. Anyway, so you guys have a wonderful weekend and good luck trading next week.